In today's Your Money Matters, a look at the outcome of our midterm elections and how that will affect the stock market and the future of economy. Craig Bolanos is co-founder and CEO of Wealth Management Group in Inverness. Good to have you back. So, midterm elections are notoriously volatile in the stock market. I did not know that.
They absolutely are. And this year, America is so incredibly politically charged. You also put on top of that the fact that polling, no one trusts polling anymore, Steve. So this market is set for a big gap up, a big gap down, or a little bit more of the same, depending on how we wake up on Wednesday morning.
Yeah, we've seen a lot of polls that were just dead wrong in the last last election cycle.
Dead wrong. You take Brexit in the UK, you take the 2016 presidential election, and normally midterm elections that are a bit of a non-event, all of a sudden are sparking big posturing on both sides, depending on how that vote breaks on Tuesday night.
Right. So, Craig, we've got a few election scenarios, and one of these three is going to be right. And the first one is Republicans keep both houses of Congress. Nothing changes politically. So what do you see happening there on the economic landscape?
Well, I think, it's no one's base case. I mean, the Republicans aren't expected to keep both houses. But if they do, think about what happens very quickly. You get tax reform 2.0. That's a stimulus. Right after that, takes away any of the scare tactics that are going to be used over raising the debt ceiling in 2019. So if the Republicans hold both houses of Congress, if you're not already bullish on the back of this good economy, you got to lean further into stocks. I think that's the outcome that happens.
Okay, what if both houses slip? Democrats gain control of both the Senate and the House.
Again, no one's base case, but complete game changer. Because if the Democrats have this blue wave, it comes through the House and the Senate, all of a sudden you put on the table the threat of impeachment, and everybody remembers how markets responded once, Starr was appointed for Clinton, and certainly people start hearkening back to what happened to Nixon. None of it was good for 401k investors.
Help us out. What happened? It was 20 years ago.
Yeah, well, I mean, very quickly, when the threat of impeachment became real, prior to that trial, the market bid down over 19% very quickly under Mr. Clinton's pending impeachment, and you saw a very similar pattern happen under Nixon. And investors remember history, for good reason. History tends to repeat itself. Well, maybe it doesn't repeat itself, but it oftentimes rhymes.
Well, it sometimes does. So the one very likely scenario is the Senate stays the same, the House flips to the Democrats.
Absolutely. If we have that go on, what I want to remind investors is you first have to always commit to check your biases at the door. Political biases have no place in the investing promised land, but just take stock in the fact that 18 of the past 18 midterm elections have had the stock market up 12 months after the vote comes in. So gridlock is not necessarily going to be a bad thing.
So what parting words would you leave us with?
I think my parting words would be pay attention when you wake up Wednesday morning, because again, with polls not necessarily pricing in two of these outcomes, right? We have a Republican landslide, we have a Democratic Party that sweeps the tables. You're some real volatility, but assuming we get the base case, check your asset allocation, remember why you're investing, remain disciplined, and I think at the end of the day, the market will provide.
All right, words of wisdom. Craig Bolanos, thank you for being with us. The Wealth Management Group is on West Colonial Parkway in Inverness. For more information, visit investwithwmg.com.